sitting at all-time peaks. Do you think there was just a reason waiting in the offing for markets to profit take? And could this get a little more deep from here?
I think the last point you made is very relevant because markets rallied so much after, I think, 7th April when they bottomed, and most markets reached 52-week highs. So small triggers can create corrective moves, and I think that's what could play out in the near term. Now it's an evolving situation in the Middle East, so very tough to predict which way it will go. But history of such conflicts has shown that eventually, I think things settle down fast, and then markets come back rapidly. So I think that's something we need to watch out for. But then it also depends on the length of the conflict and the extent to which it grows. So I think that's something we need to watch out for. And next 3-4 days will show us where exactly it's going. And so I think some correction after the strong up move was imminent. So the causes very often are unknown because on the macro front, after the monetary policy, things internally were looking all good for India. But external factors obviously have an impact.
All right. Hi, morning, Sandeep. But if one really has to go by the history, so give us some sense that since you say that history does indicate that all these things settle in and the markets also stabilize in some time from now. So which sectors do you believe one should really eye, and given an opportunity to maybe buy on dips, then which are your preferred sectors?
I think domestic oriented sectors which benefit from a easier monetary policy like financials or industrials, capital good infrastructure companies. I think these will continue to remain preferred bets. On the auto side, also we'll wait for this rare earth magnet issue to resolve. If and when it gets resolved, I think that sector is also pretty well placed. In the near term, whenever such uncertainty grows, normally the defensive sectors could do better. So in the near term, we could see pharma, FMCG kind of stocks, sectors outperform.
Okay. Sandeep, I'm curious to know whether you would profit take anywhere should the fall in the market get aggravated.
Profit taking has to be at a time when you think that the upsides could be limited from here and you don't see positivity growing. So it will be stock specific. Like, for example, when crude was falling and fuel prices were not cutting, we took sort of short-term bet on OMCs, which we exited. So, and then so I think those kind of tactical moves could be done, but overall going hugely into cash is not a strategy I believe we would be doing right now, unless and until things go completely out of hand, which although we are not experts on geopolitics, but I don't think that will happen over the medium term.
Aditya, what's the chart reading though? Does it seem like this fall could get aggravated?
As of now, it doesn't look like, Aisha. To be honest, market still is in a consolidation phase. I would say 24,500, 24,400 on the downside continues to remain as a key support area. And my sense is we need to keep a close eye on the VIX as well. And we've seen a decent up move in the broader markets. So overall, given the fact that we have seen decent outperformance from the mid cap, small cap end of the market, today's fall needs to be seen and watched carefully over a period of time next week, how this fall accentuates it. If market actually consolidates in this zone of 24,400, 24,500, I think it will be an opportunity to initiate fresh long positions for markets to claw back to levels of 25,000 to about 25,100. index continues to remain in that zone. And in the event of a correction, if you get an intermediate correction, I think so there are a lot of money which is waiting on the sideline to enter the market. That might just start doing. Banks, financials are looking interesting if you get an opportunity in the event of a correction. Defensives like your FMCG and IT, I think so they can also be looked at. FMCG hasn't participated in the previous rally, so that is one pocket which can be looked at apart from IT. And yes, of course, your defense stocks, which have been in favor post the India-Pakistan conflict, can again come back in the foray.
Some spaces that Aditya is looking positive on, a buy on dip strategy coming in, given
even what the pre-market rates in the US futures are indicating. In fact, the Dow futures right now, I know it's early days yet, but still, it's down 656 points right now. The S&P futures have knocked off nearly 2%. We're scaling lower by over 100 points. And the NASDAQ futures as well are lower by over 400 points as we speak. Right now, it's only oil. That's where you're seeing the material green. It's a 12% surge that you're seeing on the NYMEX right now. In fact, let's just bring up some more details. Brent is up 11%, NYMEX up 11.5% as we speak right now, and that's pretty much the green all across that you're seeing. Other than that, gold, silver as well have seen a little bit of a perk up. Sandip, do you sense that, at panic times like these, and especially in cases of war and the fact that, there's a war pretty much everywhere, gold and silver will continue to be large chunks of people's portfolios, and perhaps even increasing exposure may be a good strategy?
I think all that depends on what we think is built into gold prices, what is not. So I would think that this recent conflict to some extent was built in, but also not built into the rest of the extent. But X of that, I think a lot of the uncertainty positives are already built into gold prices. And now we hear that people who used to criticize investments into gold, they said gold is always a bad investment, quote Warren Buffett on gold, etc. They have become proponents of gold. So gold is not an asset today, which is an ignored asset, under-owned. It's very reasonably owned, and it's spiked up also substantially. So I would not suggest anyone to reduce their gold holdings, but I would not be a proponent of increasing gold proportion in your overall holdings at these prices.
That's Sandip's strategy on how you should be allocating, or rather navigating, the gold aspect of your portfolio. But Aditya, what are you making of gold prices on the charts? Now, we understand that this is largely being fueled by geopolitical reasons, but are you seeing any ceiling on the charts for gold prices? Because like Sandip mentioned, not all of it has already been built into the gold prices. So how much of an upside on the charts at least, can we still expect from here?
Sneha, I'll add a silver chart to it as well, and look at gold and silver both in comparison. So currently, yes, gold prices do look, they are headed north, and from here you can, on the MCX, you can see levels of 1 lakh hitting on the gold prices easily. In fact, crossing 1 lakh, 1 lakh price on MCX is a possibility. But if I have to go for either a gold or a silver at current levels, probably I'll go for a silver rather than gold ETF, or maybe if you're looking to take exposure to gold. Silver from here on looks like has more room on the upside. So if you really want to hedge your portfolio, take exposure to some of these metals, which we can actually hedge your portfolio from the downside and protect your portfolio, silver is something that I would want to add in my portfolio via the ETF. Is a good option to add, and then probably silver from here on can test levels of 1 lakh 15,000 to about 1 lakh 20,000 on the upside. So between gold and silver, yes, I think silver should be a preferred bet to protect your portfolio. Having said that, gold too has some limited upside from current levels.
You have been saying that silver is a good trade right now, right? And you've been saying that for months now.
Yeah, and I think I would believe that even at current levels, both gold and silver actually, I think both would continue to do very well. So look at it this way: even in the last 3-4 weeks or a couple of months, where silver prices have managed to shoot up to 1,05,000 plus levels on the MCX rate, we've actually seen gold prices holding on to that 95, 97,000 range broadly for itself in the rupee term. So that indicates that we could be looking at a further revival. So it's more like gold consolidating, silver rising up higher, and then once you see an eventual breakout happening for gold prices, it will start to get aligned with how silver prices are moving up. So I would actually believe that both these asset classes should continue to do well for themselves.
All right, so that's about gold and silver. But today, of course, we will be watching out for how the reaction is on some of those crude sensitives. And Aditya, I specifically wanted to have your take on the tire stocks, because in the management commentary, the only silver lining was their hope that the crude oil prices will remain lower and that can actually help their margins. Though we all know that the demand for the auto industry remains to be subdued. So give us some sense that do you believe from these levels, the tire stocks like Apollo, CEAT, they can correct more, or given the recent fall in some of these names already, do you believe that it's time to time for them to take a halt?
Srishti, I believe you can actually look at going long on tire stocks if you see any correction in these stocks, because again, the spike in crude oil prices can be one of we need to see how long these prices continue on the upward trajectory. If the situation de-escalates anytime soon, then you will see again a correction in the crude oil prices. And that can augur well for these tire companies. So my sense is if you see any correction, because the trend of all these tire stocks are going very strong. And if you see any correction in these companies like a CEAT or an Apollo Tire or a JK Tire, all three companies look interesting to me. And I'm talking from a slightly medium to longer term time horizon. You should look at going fresh long on these stocks rather than going short for a day or two. And on the upside, if I talk about CEAT, I see targets of 4,200 hitting in the near term to about medium term. If I talk about Apollo Tires, that too, I think since it's already corrected from this recent highs, offers an excellent risk to reward. 440 on the downside is a good support area. 500 on the upside can be your target. If I talk about JK Tire, that too, I think has entered into a good consolidation phase. 360 on the downside is a good support area. 420, 430 on the upside can be seen. So all three tire stocks do look interesting to me. And in the event of a correction, I would like to add them in the portfolio for a medium to longer term.
That's the take coming in right now. Look at for what the likes of an MCX, NSE are going to do, because they've received, remember, that SEBI approval to launch electricity derivatives. And, there is chatter in the market that perhaps MCX and NSE are likely to enter into an agreement with IEX as well to that regard. Sandeep, do you think this is a meaningful move, finally trading of electricity futures?
Electricity futures trading being spread out across exchanges will obviously hurt IEX, but then for the other exchanges, whether it will become any significant part of revenue is unlikely. So I think on the negative side, it's obviously negative for IEX, but positivity for the two exchanges will be limited.
Okay, just looking at what the market structure perhaps could be like. And Kunal, do you sense, okay, we're getting, I think, live visuals. Prime Minister Modi has arrived in Ahmedabad as he was intended to do so at the crash site right now. And there you can see live visuals. We will cut when we get an exact footage of him actually coming in right now. But he should be just visiting the crash site any second now. But Kunal, do you sense that today, at least, to start off in the first half, it will be just all a sea of red, pretty much where we were at yesterday?
Yeah, I think pretty much where we left off yesterday, we should start off on that similar note. But I think there could be a possibility that intraday we may see some bit of respite, because we are heading to or tapping into a major support point of 24,400 to 24,500 to 24,600 range for the Nifty. So there's bound to be some bit of cushion which the markets would try to fight out for. Also we look at round figure numbers, 24,500, 25,000 mark as more of pivot numbers for the index, because that's where it becomes hub for option writers. And breaking of those round strikes generally takes some bit of more time for the index. So maybe a couple of days we may probably just about trying to bounce back or consolidate at the 24,500 mark. So there could be a possibility that the start may be a much more on the negative side, but maybe intraday we might see some bit of respite.
There is some hope of a respite. Remember, yesterday we had CPI numbers that came in back home slightly better than what the street was estimating. So maybe there is a chance that that could play into the market picture today. But Aditya, before we let you go, since we're talking about some stock-specific action today, I want to get your sense on L&T Finance, because this morning we've seen a downgrade coming in on the stock by UBS. They have downgraded the stock to a neutral rating. They've also slashed the target price to 177 from 210 earlier. And they're citing that this is because the stock has run up almost 40% in the last 3 months. Are you seeing any sort of slowdown on the charts, and where would you be placing your targets when it comes to L&T Finance?
Yesterday's stock corrected, and if it corrects further in trade today, I would be a buyer in the stock. It's a clear breakout on excellent volumes in the stock, and the cool off that you're witnessing in the stock is on shallow volumes. They can be slightly elevated volumes in trade today because of that downgrade, but I wouldn't read too much into it. If I get the stock anywhere close to about 185, 180 on the downside, I will be a buyer in the stock. Place a stop loss somewhere around 175 and then hold it for at least a month or so. I believe the targets here can be in excess of 200 on the upside. Stock can easily surpass its previous peak of 198, 200, and then stock can inch higher closer to about 210. So I don't see any reason to initiate fresh short positions. In fact, I will be a buyer in the stock in the event of any correction post this downgrade in the stock today with a stop loss at 175 on the downside.
All right, so that's the take coming in on L&T. But Aditya, with this, we let you go on that note. Thank you so much for taking the time out and speaking with us this morning. But Sandip, coming to you, I wanted to have your take on Paytm, because just yesterday we saw almost a 7 to 8% fall on that particular stock, and that was after the official clarification coming in from Finance Ministry saying that the claims that the MDR will be charged on UPI transactions are completely false. Yes, of course, Finance Ministry has tried to clarify this news before as well. But this time, this official clarification really impacted the stock quite hard, almost a 8% cut already. How do you see this news flow, and can it fall further?
So I think these rumors keep on coming up on a continuous basis about these charges getting imposed, and every time they have been denied. So I think they got denied once more. So I don't know who are the people who keep on spreading these rumors, and based on that, stock prices move. Paytm overall, I think, has a business model which is under threat, and to that extent, the recent rally, in my view, incorporates most positives which could be playing out for the stock. So I would think that at current prices and valuations, investors should be wary.
That's the take on Paytm. But Kunal, while we are talking about some platform countries, give us your sense on Eternal. We've seen a block deal coming yesterday wherein Society General has bought almost 61 lakh shares, 60.9 lakh shares to be precise. So that's the news flow bit of Eternal. But ever since this Rapido announcement that we've heard, the stock has been under pressure. And even before that, post its quarter four earnings, we saw a rally. But after that, the stock has been subdued. So what's your take on Eternal? Any change in direction if you're seeing on the charts?
Not really. I think largely what happens is after such a kind of a sharp correction, news flows surrounding the stock price, the stock tries to consolidate. We also look at it this way, the stock was at 40 or 50 rupees when that major low happened for Eternal. From there, the stock moved towards 300 plus marks. So it's almost like a 6x, 5x kind of a up move for the stock price. Post that, you're bound to see some bit of news flow, the stock establishing a major trading range and then consolidating for many quarters to come by. So I think right now the range, the big broad range for Eternal is 300, of course, on the upside, and 200, 195 thereabouts on the downside. But that within a big range consolidation, the range keeps on getting narrows for a certain period of time. And right now we are looking at 225, 255 broadly as a range for Eternal on the upside. So which means that we should be looking at the stock to try and consolidate over here. I actually believe that from a long-term play, this could be a very good opportunity to try and buy the stock if it dips down closer to that major support point, which is around the 200 to 225 zone for Eternal.
I'm just looking at a very interesting note from Motilal Oswal on the cables and wires sector right now. They're saying that cables and wire export is expected to post a 14% CAGR over FY 25 to 30. They're talking about competitive intensity, of course, is rising amid this large capex by incumbents and then new entrants like Ultratech as well as Adani into the segment. Valuations, though they feel, have derated, but Polycab, according to them, stands out with a 20% market share and industry best margins. Sandeep, I know when you had the news of Ultratech and Adani's entering into the cables and wires segment, you did see a fair amount of correction pretty much across the board in this sector. And I remember chatting with you also about this, where you continued to believe that that fall was a good accumulation or buy point for some of the wire and cable incumbents. What is your sense right now on how things are positioned within the sector?
Stock corrected substantially, but they have bounced back also. Now, the entry of a large player obviously could be disruptive, but it will not be as disruptive as it was in paints, because paints, the organized sector, there were only few players and the impact was much more. Here, in cables and wires is very sort of diffused kind of sector. So the impact will be lesser, but the impact will be there. So we obviously cannot give the same kind of valuation which these companies were enjoying a few months back. After the bounce back, I think valuations are now either in fair zone or some stocks are above fair value. So I think this would not be the time to get into these, I would think.
Motilal Oswal is retaining their buy on Polycab. They've put a target price of 72.50, a buy on Voltamp as well, target price 1600 there. Then neutral on Havells, neutral on KEI Industries, and also neutral on RR Kabel with a target price of 1230 on this particular stock price. Kunal, we've also chatted about this entire segment in the past, but anything that you like amidst these stocks, Polycab, Voltamp, KEI, Havells or RR?
So KEI and Polycab are the two charts which are actually looking much better. So, they have this odd tendency of going into a sudden sharp correction. I think there was a phase for Polycab a couple of years back when the stock had fallen 25 to 30% in a matter of just about a couple of weeks. But post that, we saw the stock not just coming back into a recovery phase, but then moving significantly higher. I think that level was around 3,000 odd for Polycab, in that kind of a phase. Even the recent past, the stock fell down to, I think, 4,620 was the low for Polycab, and from there the stock has recovered. The good part for many of these stocks like KEI as well as Polycab is that these stocks are now trading closer to their long-term moving averages. So after a sharp correction where these stocks had fallen back by, I think, around 20-25% or more, post that we've seen the stock trying to cool off and come back into their mean reversion phases. That, I believe, is a strong signal that we are looking at a revival phase for these stocks. And looking at the historical context, I think these are the kind of names which one should look to buy from their long-term perspective.
All right, but Sandeep, I also wanted to have your take on some of the EV plays in India. And the reason I ask this is because globally, the EV roadmap is seen to be hitting a roadblock rather, because back in US, we see that Donald Trump may be coming out with its big, beautiful bill, and Elon Musk has been quite vocal about it. In China, we are seeing the companies cutting their prices like anything. And back home, though it has a great opportunity of growth in terms of the market share, but the fact of the matter is that the sales are not holding up. Do you believe it's time to reset the premium valuations that these companies used to hold?
I think no company is pure EV in India except for Ola, and they are not at premium valuation in any case. So I don't think companies, because of this, are at premium valuation. Longer term, I would still think that the EV penetration will only keep on growing. In the short term, we have this rare earth magnets issue and risk of a slower adoption. So I think those risks are there. But for over a 5, 10, 15-year horizon, I think the EV penetration has to become much more significant.
And Sandeep, you think M&M is the best position for that?
M&M overall as a portfolio is well positioned both in terms of traditional ICE, the recent EV launches, as well as the farm equipment segment, which should do very well over the next 2 years. So I think So they are present across the board they are doing well. So I think that's the positive part.
Say that. Sandeep, what about the two-wheeler plays though? What's your preferred list of stocks there?
But two-wheelers on valuations, I like Bajaj Auto because it's corrected substantially. The domestic market for them was not doing as well, but could see some recovery. Exports are doing well for them. And their takeover of KTM has an option value. So eh, the downside because of that is limited. But if they can actually turn it around and make it profitable, then it could add significant value over the medium term. So I think that's one optionality which has recently come in.
On that note, I think you're getting another Microsoft Teams call. But Kunal, what do you sense how the auto charts are actually positioned right now? And where is it that you're seeing strength and weakness?
So strength, of course, is for M&M, Eicher Motors. These are two names which have been discussing. Strong charts and more resilient in the fact that these stocks in the last 5-6 months of that major correction from September 2024 highs, they managed to withstand a major part of the